Welcome back, everybody. Let's update our view on the gold market. Sive is here with the forexpeacearmy.com. So we have prepared a weekly report as usual. So you could treat it as some add-on to things that we said yesterday. In the Forex market report, we have considered a few important, by our view, driving factors that stands right now in the market, which makes impact not only the Forex, but actually all financial markets, because they are directly related to the dollar value. So if yesterday we more were speaking about some financial factors, today we're taking a bit broader look on the factors and explain why we think that in the long-term perspective gold has actually no options than to move higher. So there are actually some maybe not quite expected, not quite obvious factors, but on this combination, as you will see, it definitely tells that situation is becoming, well, really tough, and something big may happen in the nearest few months. Speaking about the short-term perspective, gold market is making really interesting twist. So if on the euro currency we do not see something really surprising, the overall picture looks common, and we just prepared some short-term plan, but we don't have any bright spot there to just say that's it, it's great trade, so let's focus on, let's keep going. On the gold market, it's a bit different situation. First of all, on the daily chart, you could see that triangle consolidation is forming, and if even not taking into consideration the bullish grabber that we've got on the weekly chart, which is I think really important detail for current background, the performance on the lower time frames is becoming less bearish. So our market by somehow was able to hold the major levels. If euro currency has dropped, on the gold it's a bit different story, because gold has additional supportive factors from the geopolitical tensions, and it reacts a bit different on some political events, especially inside of the United States. And actually it was able to stay above the important levels, which makes us think that situation is not quite bearish here. Yes, we have some complexity on the daily chart in a way, in the shape of the bearish pattern that has been formed last week. Here it's still bearish grabber and it still exists. Nominal trend remains bearish, but with the weekly bullish grabber that has been formed here last week and the performance on lower time frames, I think that currently at this point it's not time yet for taking the bearish positions, because if you take a look at the 4 time frame chart, the shape of the market start reminding the diamond consolidation, and potentially, as you know, the diamond is usually a reversal pattern, so it suggests some upward thrusting action out of it, which means, and it's actually forming around the vital area of the 4023 fib level. Based on this performance, yes, maybe this pattern looks a bit ugly, so not very typical, but the major breakout hasn't happened yet, so market stands in the 618 support, and nominally this pattern still has chances to work and start upward direction. This is possible. Based on the weekly grabber, we should get at least action above the stop, so it might be some kind of the A, B, C, D, and regardless triple to pattern, or maybe some further extension will be, we do not know. But in current situation, I wouldn't hurry up to bury the existing hand shoulders pattern that we have here. Next turn is on the hourly chart. So here you could see that we've got pretty nice regardless triple to buy, as we suggested. But here as well, market was able to hold 618 support, and correspondingly, this pattern, which is forming inside of the diamond, is also valid for now. Also have here some minor grabber that has been formed on Friday, suggesting further upward action. In fact, here you could recognize even more patterns. So this is big hand shoulders, but inside of this you also could recognize minor hand shoulders pattern. So it's shoulder, head, and now it's forming another shoulder. What I would like to say is that in the current circumstances right now, I wouldn't consider the bearish positions by far, despite the performance is very choppy. And the major point that market has to break to return back to the bearish way is to drop below the 4K level. Just erase all this stuff that is forming around the crucial support level. Until this will happen, I suggest to not consider any bearish positions for now. But here is also, on the bullish side, another situation. It's not quite simple to decide, make a decision on a trade. Why? Because nominally, by all rules, you have to place your stop somewhere below this area, right? As you intend to trade all this stuff, different patterns and so on. Because this is major invalidation points. And whatever will happen inside of it, it will not break the overall background, bullish background. At the same time, if you decide to take position based on one of these patterns, it might be, well, a bit risky from the point of view that you could get occasional washout and you will have to re-enter if you place a stop tighter. For instance, based on the hand and shoulders or based on this grabber, for example, that's the risk. And here is what you have to make the decision about. So if you agree, if you would like to consider taking long position here, you will have to make the decision how you will deal with the current situation. Either use tighter standing loss and minor patterns inside, or waiting for a deeper retracement closer to the major invalidation points to just contract your potential loss, or you will drop your trading lot to minimize the risk, or maybe you split your position in parts and will enter on some predefined support levels based on particular patterns. Lots of different options exist. Some ultimate options also, for example, you could consider even stop buying orders for a breakout. For instance, you do not want to take part in all this math. You would like to just get the position on the breakout. So you could suggest taking position somewhere in the moment of the breakout. This also might be a solution. Of course, you will get at much worse at worse price, but well, it has its own advantages. Some options exist here, but this question you will have to answer by yourself. On a general view, I just explained what really is going on here, how the picture overall looks like, and based on the current situation with all the patterns that we have in place, I think that the bullish song is not over yet. So market still has chances to start working with the patterns that were forming here for actually a couple of weeks already.